Welcome to the weekly swing low. It's February 16th, 2025. We're going to cover our usual tickers today. I would say there's complex action out there. QQQ has made all-time highs. SPY just threatening just below that, but we're late in the daily cycle. So let's talk about that. Let's start with SPY as we usually do. So first off, let's go to the weekly chart. So on the weekly chart, we had this major low that was made back in at the middle of January, and that was potentially our weekly cycle low at week 23. But then we basically went nowhere for the last 4 weeks. But look at this pattern. I think what we're seeing here, this is now, we closed above the 10-week moving average, that following week after this big low. And then we just kind of puttered around. Now we're threatening to, this is a consolidation that's threatening to break higher. The catch is we're already getting later in the daily cycle, and we'll zoom in on that. And again, we're pretty late in this long-term cycle. You look at the monthly chart. And so it's not clear that this weekly cycle, which is potentially on just completed week 4, about to start week 5, it's not clear that it's going to be right translated. That's going to go for this last one went for 17 weeks, the one before that 13, the one before that 22. It does tell you there's likely some more upside, just tactically speaking. And so you play, we'll talk about where to play stops and all that, obviously. But look at this thing. We basically haven't gone anywhere for the last 4 weeks. We've just consolidated near the highs off of this candle. I mean, I'm just going to zoom in on that. So look at this. You had this big rally up, and then now we've just consolidated. Again, the got you part is we've kind of wasted, right? We essentially kind of wasted 4 weeks in the weekly cycle. That said, this could, prove fuel for higher. The other thing is that, as I mentioned, QQQ is already at all-time highs, so that tells you SPY is probably going to get dragged up. It's just a question of how long could this rally last. And to that point, look at this daily chart. So here's the tough part. So we made this high here on day 8. So that was February 24th. So this is your weekly cycle low that we were talking about, right? Like, of course, thinking about multiple time frame analysis. Any weekly cycle low, it is by definition also a daily cycle low. It has to be. You can't have a weekly cycle low without a daily. So that weekly cycle low was this daily cycle low. And then we had this nice strong rally for 8 days and then topped out on the 24th. Again, this is essentially just a daily version of that weekly chart. And this is what you get, what those 4 weekly candles look like on a daily time frame, just sloshing back and forth. The problem is this is now, Friday was day 23, and that means, Monday is day 24. The point is this isn't super early in the daily cycle, and so we're most likely going to make a new high above this high on day 8. That this isn't going to actually be our daily cycle high the way it looked like it was going to be on day 8. But the thing that's not super positive is that, again, we're already on day 23. So imagine we get a rally. I mean, this is sort of optimistic. Let's say we get a rally for 30 days. That gets us a high around the Wednesday after next, right? The 26th. That again, as I always say, these are not predictions. It's just what could you expect? Like, how long could you expect a rally to go? So that's important context. So that's SPY. And I mean, look at what a candle for Monday. So you're gonna watch for a break below essentially 609. A break below that and then a move higher would be your false breakdown, breaking the Monday's low. And because of the strength of this candle, I think you really want to look at even lower time frames. So I'm going to zoom in on the hourly candles here. This is SPY again. So look at this little bull flag on the hourly. So it's helpful to zoom in because sometimes there's price structure reveal that's very informative. So that tells me that's your risk point, right? Like that's 609. Like this is the smaller version of that 609 risk point, I should say. Like that's your daily low. And below that, right, like you have this kind of area here, right, where price consolidated here. And so anywhere from here to here. So another way of saying this whole range could become a chop range, and you really need to stay above. I call it 607, something like that. Again, unclear. Most likely we don't get a super long rally from here, but certainly we could get several points. So that's SPY. You want to watch that 607 area. Let's move on to QQQ. I already mentioned this thing has already made all-time highs. So now we're talking about potential price discovery. But Same kind of issue as SPY on that daily chart. That was day 23 as well. So same count on the daily. And so here you had a more substantial day. And so your low there is 530, 567. So you want to watch around that level on the Qs for the daily. And again, same kind of, so this is a little bit, so this is really the same kind of price action. This is your candle, your low on that, that weekly cycle low back on January 13th. In this case, we had a deeper retracement, right? Like, look, this low came much closer to this low versus SPY, but now it's ricocheted higher, like it's outperforming SPY. That's another thing we're going to start doing as of today. We're going to look at ratio charts. We'll look at QQQ versus SPY. So we'll look at that next just to get a sense of what is outperforming. Obviously, I've just kind of given it away. It's definitely QQQ poking its head out here at all-time highs on the weekly. But again, you want to watch that 535.67 area. But again, I'll just kind of call out, like I'll use the Qs chart here. Look at this robust rally, right? Like at some point, something's got to give. Oh, wow. So this is actually, yeah, right. It's month 28. That's a pretty long rally that's a pretty long-term rally. The one before that was 20 weeks, just for context, or 20 months, 20 months. So it's been running for 28 months. All right, let's move to the ratio charts quickly. So we have, this is QQQ versus SPY. So this is an important it's almost like a game within a game. So look at this weekly chart for the ratio of QQQ to SPY. So it bottomed actually the last week of January. So this is what looks like a weekly cycle low, and we're on week 2. Don't get too hung up on it's cycles for a ratio. The point is this price action tells you we just had a weekly swing low, and we're now threatening to take out this high here. All that to say, when this is moving higher, QQQ is outperforming SPY. So that's what we should expect, that like we potentially entered a new weekly rally in QQQ outperforming SPY. And if you look on the longer time frame, this has just been a consolidation on the monthly chart for QQQ versus SPY. So at some point, this thing is going to break out the same way. Like, look at this move up. Like during this period, you had to be long QQQ versus SPY because it was, you still made money being long SPY, but you could have made so much more being long QQQ. At some point, we're going to get another period like this like massive consolidation. What is that? Since June 2023. Wow. So going on 2 years now. So that's an important tell, and how that looks on the daily chart. It's day 13, I believe. So that another way of saying that is it's late in the daily cycle, or I should say it's not early in the daily cycle anymore, but for QQQ in absolute terms, because it's day 23, but on the ratio chart, like in terms of outperforming SPY, it's actually still relatively early. So QQQ is a thing that I'm going to focus on over SPY. Let's look at the Dow really quickly, DIA. So DIA is underperforming both SPY and QQQ, and you can tell by looking at the weekly chart. This is just an inside week, right? Like, let me zoom in there, right? Like, price doesn't make a higher high or a lower low compared to the previous week. And so we actually expect that DIA is going to open as an inside week next week. So the range you want to watch is a high of 448 and a low of 441. So something like a $7 range. It's going to open somewhere in the middle there. And depending on the price action on the daily, it'll tell you if it's going to the lower end of the range or the higher end of the range. In terms of the daily, look at this, just consolidation. And the daily was actually also an inside day. So we really need to get out of 447.85 to 443.70. That's the range from the Thursday candle, which the Friday candle was still inside. So we need to get out of that range. So a break of that range will tell us more likely than not which direction we're going in on the weekly. So that's DIA. And as I talked about ratios, you can see clear as day, DIA is in a downtrend versus SPY on the daily chart. So it topped out on January 28th. So it was doing better than SPY. And then we had a big swing high. And then look at this droop. And this suggests that we're starting potentially a weekly decline. So in the same way that QQQ is starting to outperform on the weekly, like potentially a longer term trend, this is potentially the start of a longer term downtrend for the Dow. Again, not in absolute terms, but just relative to SPY. So I'd be staying away from Dow and associated stocks for that matter. Apple, CRM, and we can look at individual names. They're going to be idiosyncrasies, but like that tells you kind of the trend. This is IWM. We talked about how IWM was in a massive trading range. It poked its head out here for several weeks, and now it's back inside. That's all that's happening here. It's not super exciting. The lower end of the range is closer to $200. I'm not saying we're going there, but look at this. So it's similar to the Dow. We actually had an inside week last week. So the levels you're watching are a high of $230.70 and a low of $220.67. So call it, a little less than the $10 range. And we're probably going to open as an inside candle. So like just to be clear, given the way this weekly candle closed, we'll probably open next week something like that. And so it'll be a question of, which side of the range are we going to break out? Are we going to move? Are we going to go take out the high or take out the low? Again, so very similar to the Dow. On the daily chart, this closed as a update. So this is an important pattern. This is setting up for a compound bearish outside candle. You've probably heard that a few times. Like that's an important concept. That idea that candle makes a higher high and then it goes red. So at one point, this was a beautiful big green candle, and then it reversed, right? Because we know it opened here, right? If you can see where my mouse is, it opened here, and then it went all the way up here, and now it's come back in, but it ran out of time. So usually what happens is when it makes a higher high and then goes red, it also makes a lower low, and so that would be a low below 223.75. That would be my expectation, except it's likely the other indices are moving higher, so this thing could get dragged up to be fair. And in terms of what level you're looking for, I think you want to zoom in here as well, kind of similar to how we kind of zoomed in for SPY. So with this one, this is your 1 hour chart. Yeah, you've got to stay above 225. 40 in that area, right? Like a breakdown below this kind of looks like it sends you down here, like you basically erase the rest of this move here, which gets you to that 220 area. So, and as you can imagine, the ratio chart looks awful, similar to Dow. Let me fix this. Similar to the Dow ratio chart to SPY. I mean, yikes. It's even, oh gosh, this is even worse. Like, look at this big bear flag. I mean, that's why ratio charts are so important. And I'm going to continue to make them a priority here. This is a big bear flag of this move down that is threatening to break down. Again, it's just a blaring signal that IWM is not the thing that you would want to be in relative to SPY. Now, the converse of that is a breakdown below here and then a reversal higher. That's a potential false breakdown. Again, we're looking at a ratio chart, so that could mean any number of things on the absolute charts, but this is not something I'd be jumping into right this moment. If anything, it shows all the signs of going lower, and look at your weekly chart. Oh man, this is not awesome. Which makes sense. This weekly is just a bigger picture view of the daily. All right, let's move on to SMH. We'll go faster on the rest of these. So SMH, so it's funny because we looked at that ratio chart, right? And we said that we were on day 13 of the daily cycle. What if I told you that SMH is also not quite the same, but day 14? So basically, when QQQ made that turn, when it started outperforming SPY, SMH also made an important daily swing low, daily cycle low, right down here. So we're on day 14, so it's not super late. And we talked about this in previous videos. We have this gigantic gap on the weekly chart because it happened on a Monday. This is, call it the deep seek gap, right? now we're within earshot of filling it, right? Something like this, right? I definitely look to take profits around this area. So that's, that gives you a target of, what is that? 258, something like that. We're like, this is the pattern it's setting up. And this could be the case even if it's going to go on to make another lower low, right? Because this could just become a lower high. But there's definitely, upside here. So that's the weekly version. And of course, on the daily, we're only on day 14. So there's no, let me get rid of these other lines so it's like clearer to see. Since we're only on day 14, there's no reason to think why can't we close this gap, right? That's like one or two daily candles to close that gap, which close actually it's here, right? Like the gap is this candle to this candle, right? So that's a pretty like, and we're already in the gap, right? Technically. So that's SMH, a good, and let's look at like the low from Friday was 250.63. So that's not a lot to risk for this potential gap fill and potentially even more, obviously. Um, so that's SMH. Oh, we also talked about bigger picture. Look at these candles, right? At some point, there's going to be an explosion, right? This thing is going to start trending again. Now, it's still like we're about halfway through the month, but like imagine a world where we get something like this is our next, our March candle, right? That's what this pattern is kind of suggesting here. But I'll take it, one tactical trade at a time. Let's fill that gap first. But I mean, that's what it looks like this is setting up. All right, so that's SMH, and as you can imagine, the SMH versus SPY ratio, just like QQQ, it bottomed right around the time when SMH bottomed itself in absolute terms, and also looks like we're starting a new weekly trend. So that's looking good to reinforce things. All right, let's move to Dixie. Dixie is looking weak. We talked about how we were seeing more evidence that, that high on January 13th. And by the way, did you notice, or the week of January 13th, did you notice that week was the same week that we got the bottom in SMH? These are all correlated, right? Obviously, the dollar peaks, SMH bottoms, and then we start this weekly cycle. Decline. So it's now the catch though is that it's now, what is this, 17, 18, 19, 20. So we just completed week 20. And so we're not like, it's not like this is this appears to be a right translated weekly cycle. So it doesn't mean we would expect like this decline to erase this whole move. Maybe it will. But at the very least, I would expect that we're going to test this area. I mean, look at this. This just looks ripe for the testing. That's at 105.74. I'm going to be looking to play some UUP calls because they have very low IV with something like a target like this. So like I'll just flash to UUP, which is the ETF that covers. That would be something like this. So you're targeting a move to around 28.60, let's call it, right? So it's about 50 cents down, which doesn't sound like a lot, but a 50-cent move on UUP is pretty massive in terms of options contracts. Let's go back to Dixie. Let's talk about what the daily. So importantly, we talked about how this looked like a daily cycle low, or which it probably was. It most likely was. We had this big high here. Like we had, well, at one point this was a big green beautiful candle, as we talked about. That's what happens, right? Candles transform before they close, and then all the oxygen got sucked out of the room, and this thing made a swing high below, just to be clear, let's be precise, below 108.34. Once price crossed below 108.34, it crossed below this low, and we started this downtrend. I mean, look at it. I hope you can see this. The more you start to see this stuff, it just becomes like, your eyes can't not see it, right? It's like, this is kind of a perfect little, look at that, down and then lower high, down. We're going to get another lower high at some point, right? Like we know that. I mean, we should expect that, I should say. That's the opportunity. Once that lower high hits, once we get that swing high, right? Like imagine a swing high like here, beautiful shorting opportunity. So that's Dixie. Now to the upside, let's think about where are we in the daily cycle. So the high was on day 5, and we are currently on day 14, right? So you generally get a daily cycle that's at least like 20 days. That doesn't mean it has to be by any means, but let's say that puts you at Monday, like next, the Monday after next, in terms of like the minimum amount of time you would expect before a rebound. Again, not a prediction, just an expectation and something to watch the price action and react. And depending on if it's playing out that way, you know, that's helpful. And if it's not, we have to pivot, obviously. So a break, like let's say this thing were to break above 107 spot 18, that would represent a swing low, right? Like look like that. Like look at this. Imagine Monday we get this big candle that closes right there. That is really important to note because look at this low, right? Like this is right now potentially a false breakdown of this low here. So that's the bullish side of it. You always have to make sure that you're aware of both sides, like the bullish or bearish. So that's the Dixie. What about the US 10 year? Doing a very similar thing. It's on week 21 of its weekly cycle. So it topped out on week 17 versus the dollar that topped out on weeks, which for the dollar it was week 16. But it was the same week, right? Like the week of January 13th, that same week that semis peaked. Again, not a surprise. You really want to watch, like I can imagine we get a rally back up to this high here to test it. So that's 4.66. Otherwise, you're really, I'm expecting a break below 4.44 and then a test of this area like 4.2, which gets you within earshot of 4, obviously. Like this thing could kind of come down really fast. In terms of up, like, what's a potential bullish scenario? It would be a close above 4.55. That would make this a swing low and actually a little higher low versus this. So you want to watch for that as your sort of invalidation. Let's go to oil now. So for oil, this thing has been sloshing around. I had drawn these candles, like that was kind of my expectation. Look at this, really ugly weekly close. There's not much more to report here. We're in a downtrend on the daily. Look at this little lower high, this lower high. A break below $70.36, that really opens you up to the bottom of this range, which is around 67. But at this point, a no touch for me personally. And important to note on the monthly chart, look at what's forming here. A monthly swing high, right? Like if this thing closes below 71.79, that's your monthly swing high. That tells you we're probably gonna go to the end of that range, or to the bottom of that range if we don't get there before the end of the month, as it is. Okay, so we'll move to TLT. So this is moving in the opposite direction of yields, right? As yields move down, this thing moves up. And so the big unanswered question here is, where are we in the weekly cycle? Was this a weekly cycle low back here on week 30 and we're on week 11 right now and in a declining weekly cycle? Or is this actually the close of week 4? The helpful thing is this big, long lower wick has really helped to kind of clear the air. So the low there is 86.86. That is not a lot of downside compared to where we closed here at 89. As long as price can stay above there, this thing has a fighting chance. And let's zoom in on the daily chart to see what that would. So we have this, important structures to note. We have this pretty sizable gap here. That's helpful to know about. And there's actually still a little bit of an unfilled gap here. So I wouldn't be surprised if we get a test of like 88, 89. But like any move here, like down here, could actually be a nice buying opportunity as long as price is able to hold a higher low and you're still above this wick. Because this wick spells potentially, like what this wick signals to me is the potential that this was your back test of this low. Like this went up, back tested, and as long as we can stay above it, we're good to keep moving higher in a new weekly cycle. And this maybe was your weekly cycle low, and on week 36 versus this being that your low. And of course, as we look at yields, that'll give us a sense, right? If yields are really breaking down, going lower, that means this thing is going to keep running, which is what seems like it's happening, based on that 10-year yield chart. All right, TBT is going to be the opposite. So for TBT, the high of this candle is, what is that, 37.13. We really got to break above that. Again, this is just going in the opposite or the same direction as yields, actually. So as yields go down, this also goes down. All right, let's move to crypto. So Bitcoin, not a lot to say here. It's like not a lot to see here, people. Look at this weekly bull flag. As long as this thing can respect like the, call it the high 80s, low 90s, which is the boundary of this bull flag, you're good. If anything, tests below that, probes below, and then a recapture are great re-entry opportunities. No reason to think this long-term cycle topped out. This is your monthly chart. You have this period of consolidation and a move up. This is just another period of consolidation. And so patience is the order of the day here. But to be clear, we like how many months into this are we? It's month 27, right? So previous cycles tended to top out like in the mid 30s, so like month 35, 36. So we still have maybe even another year, like close to another year to go. But this price action has been miserable, to be fair. ETH just kind of puttering along. I talked about in the last one, these things tend to revisit these lower wicks, and for ETH that's 2150. But the good news is we now have structure, right? We have this higher low. So now 2519, call it 2500 even becomes your line in the sand. ETH just needs to stay above that. And it maybe has a fighting chance of not revisiting this wick. Bitcoin, that same wick. Right, so for Bitcoin, that wick is 91, 170, right, which makes sense. It's like this lower boundary. So, and that higher low for Bitcoin is 94,000 basically. So that's all you have to risk. That's actually not a lot. And again, similar kind of idea, a test of that area and then a reclaim, great entry. So that's Bitcoin, ETH, that's your crypto. Let's talk about gold. So gold is in a relatively new weekly cycle. So it's 1, 2, 3, 4, 5, 6, right? Just closed out week 6. And I mean, this thing has just gone straight vertical, and you know what comes up must go down. Now that doesn't mean this is your weekly cycle top here on week 6, but we are entering a daily cycle decline. And so the low for this weekly candle is 28.54. I think it's very unlikely we don't test that level, probably even break down below it. And let's look at the daily chart. The good news is this is pretty late in the daily cycle, which means we don't have to have a super. So we topped out on day 37, and Friday was day 40. So that is a really long rally, right? 37 days. And just to be clear on the levels, right? So the swing high forms below 2882, basically, right? Let's call it 2882. So we just barely closed below that, right? But that becomes your level in this, your line in the sand. Once we cross back above that, we probably have, I mean, and obviously also have a daily cycle low, or excuse me, a daily swing low. We probably have our daily cycle low. So that's what you're watching for, your daily cycle low. I would be surprised if we didn't at least like test this area. Look at this little, potential. I could see a lot of stops being somewhere around here. But and at that point, 2830, you're a stone's throw away from 2800. The market loves kind of round numbers. You see this potential high here was at 2784. These are all kind of scenarios. I don't think it's helpful to predict where you think the price is going to bottom. More helpful to wait for that swing low. But knowing around where it might be expected is helpful, like to combine those two. So that's the picture for gold. And then if we look at silver, silver is in a Okay, so for silver, yikes, the action is even uglier. So we don't actually have a swing high for silver yet. We just have a big, nasty upper wick on a daily chart. The low on that candle is 3208. So a close below that gives you your swing high. Given we already have it for gold, it's likely that the top is in here. But, obviously, anything could happen. And it looks like, you know, this is a much less healthy weekly cycle rally than gold, to be fair. Um, like, I would imagine we at least get to 31, right? Which is, breaks below the low of this weekly candle, maybe even below the low of this one. That's 30.69. So like maybe 30 and a half kind of thing. So I think the swing low for gold will probably, happen at the same time as the one for silver is the short of that. And for GDX, we did get our swing high. So for GDX, actually, this is a bearish outside candle, right? So at high is 42.66. That's 42.59. Yeah, by like 7 cents. So it made a slight higher high above this high here, which was the high for the daily cycle, and then it came in. So what day is that? 31. That's a very long rally for GDX for miners on day 30. But you think about it, right? Like if we literally just started a daily cycle decline, we probably have like at least another week of downside, probably, right? Like likely. That said, I would look at a break above 41.72, which is the low of this candle, as bullish. That we're probably and that probably comes after more downside. So you'll probably be able to buy lower with some structure, a daily swing low, obviously. All right, so we'll wrap up here with platinum. So platinum is doing the same thing as gold and silver, not surprising. So for platinum, that swing low happens below 1,030. And for palladium, that swing low, yikes, that's an even uglier. So palladium actually, oof. I mean, it depends on how you want to think about this, but like this could be like basically a very, very left translated daily cycle decline. But for palladium, we actually don't have a swing high yet. We need a close below what is that? 988. And finally, natural gas is actually looking like kind of good. It's rebounded. So it looks like we've put in a daily cycle. We put in a daily cycle low. Let's refresh this chart. So this looks to be like it's holding as a daily cycle low on January 31st. So that puts us at, a rally of 10 days old. And more importantly, is this just this tiny weekly cycle decline that we're going to have, just like 3 weeks? Unclear at this point. But once we broke above $3.73, this became a swing low, right? And so it's also possible that this is just forming a lower high, right? So the next kind of like obstacle to get through is this high here, up here. So that's at 404. So that's what we're watching for next. And those are all our tickers. Again, it's a mixed bag out there, but I think there is still upside. Just we're late in our respective cycles. So make sure you have your low stops and that you're taking profits at potential resistance zones. That's all we've got for this week. Thanks for watching.